The price of silver is about to absolutely explode. So let me explain why, and let me also explain how you, as a regular investor, can capitalise on it as well. In this video, I'll be explaining where and how you can invest in silver, and whether you should invest in tangible silver, an ETF, or an ETC, which is an exchange-traded commodity. Now, as you probably already know, the world is not in a great place at the moment. The US and the UK are technically already in a recession. And by recession, I mean the technical definition of a recession, which is 2 straight quarters of negative GDP growth. Although there haven't yet been these waves of evictions and foreclosures that you typically see in a recession. And this is largely because of the measures that the US and the UK governments and other governments around the world have put in place. They could still happen, but they haven't happened yet. We could be on the brink of one of the biggest recessions the world has ever seen, but we also might not be. But I'm not going to talk about that today. Today I'm going to talk about why the price of silver is about to explode. But before we get started, if you've got any questions about anything that I say today, be sure to drop it down in the comments below. Now let's get into the video. Also, as a quick disclaimer, I don't work for any silver companies or mining companies. I do have an investment interest in silver, but I also haven't gone crazy with it. I haven't invested my life savings into silver. But from my own research, I do believe that the price of silver could increase nicely over the next few months. So it's going to be a fairly unbiased review. So the price of silver is currently nearing all-time highs, and it's been rising fairly rapidly since the start of June. It's had a small pullback from its recent highs of around £21.50 an ounce down to about £21 an ounce, and all-time highs were set back in 2011 at £29 an ounce. So at the moment, silver is obviously currently below its all-time highs. But the really interesting thing is to look at the price of gold. The price of gold has shot past its 2011 highs of around £1,150 an ounce, all the way to £1,600 an ounce, and it's still growing. It's in completely uncharted waters at the moment and could grow even more. Now, for those of you that know me or have watched some of my other investing videos, like my monthly stock picks, you'll know that I don't just stop at a little bit of technical analysis. I don't just do a quick graph review and, oh, yep, that's a buy, guaranteed profit that one. I like to go a whole lot more in depth and talk about the fundamentals of a stock or an asset. I like to look a little bit further and say, why has this stock increased, or why is this stock going to increase? And what's going to be the driving force behind this stock or an asset? Firstly, let's talk about the supply and demand equation, and I refer to this equation quite a lot when I talk about the prices potentially crashing in the housing market. So what is the supply and demand equation? And it's fairly straightforward, but it's not an exact science or always 100% accurate, because it doesn't consider external influences like government regulation, taxes, price elasticity, and other bits and pieces as well. But effectively, if the demand for something is really high and the available supply for something is really low, like diamonds for example, then the price is going to be high. But if the demand for something is really low and the supply of it is really high, like trash or seawater for example, where there's loads of it but no one really wants it, then the price is obviously going to be low. So let's take silver for example. If the stocks all around us start to fall, then people might start investing in silver instead, and that's obviously going to cause the demand to go up. And if the demand goes up really quickly, then the available supply of silver is going to go down, because obviously some silver merchants might sell out. So if you've got the demand going up and the supply going down, that's obviously going to increase the price of silver. And we can see so far that the demand for silver is definitely starting to increase. In June, we actually saw a lot of the silver merchants running out of stock, and they were behind on deliveries by a week or maybe even 2. And this is obviously what's caused the price rise in silver so far. But the prices of the stocks all around us aren't really falling too much, so actually not that many people are currently invested into silver at the moment. So if the stocks around us did start to fall, even more people would be investing in silver, pushing the price much higher. If you're enjoying the video so far, then be sure to drop a like down below and subscribe to the channel if you haven't already. Over 66% of people watching this video aren't subscribed to the channel, so let's try and reduce that figure and have more people subscribing to the channel. But what exactly is driving these rises in prices? Why are people going out there and buying more silver or buying gold? And it's because of the way these metals behave during a downturn. Now, we all know that gold is a good investment during a recession. But why? During a recession, we usually see the majority of the stock market impacted. Borrowing becomes more difficult because banks are unwilling to lend, and therefore companies don't really go out and buy other companies and expand. Consumers are also scared and therefore more likely to try and save more and not help out those businesses by buying their products. This usually leads to a reduction in sales, a reduction in profits, employees being let go and unemployment rises, and therefore obviously as all these companies aren't performing as well, the stock market is quite heavily impacted. So usually the stock market isn't a great investment during the recession, although there's definitely some exceptions to this rule. In the current recession, Netflix would have been a great investment. Obviously the pandemic is what caused the recession, and this pandemic also caused everyone to be stuck inside, which meant that Netflix could thrive. But for example, if you were heavily invested in the S&P 500 on the 21st of February, by the 23rd of March, you probably would be regretting that decision and debating your entire investing career. So the stock market's out. What else do we have? We could invest in property, but this isn't the perfect decision either. During a recession, the property market tends to fall. Because people lose their jobs, they then obviously can't afford to pay their rent or their mortgage, and they get evicted or foreclosed on. Because of this, tons of homes come onto the market, which massively inflates the supply, while simultaneously reducing the demand. Because obviously if people don't have jobs, well, they can't go and buy properties, and that causes the prices of properties to fall. Now, the reason why I like property is because it's more of a longer term play. You're not going to flip your property in 45 seconds. You're not going to swing trade your home overnight. You're probably not even going to buy a rental property or a buy-to-let property for a year or two. It's probably going to be on a much longer timescale. You're probably playing a much longer game, holding on to those properties for 10 years, 20 years, 30 years, maybe even longer. So even if you do invest just before a recession, well, in 20 or 30 years it won't really matter anyway, because the price of that property will be much higher than the pre-recession highs. As an example, if you bought a home in London or in, say, Beverly Hills in LA, you probably wouldn't care if you bought the home in 2007 and the market crashed in 2008, because in 2020 that property is worth much, much more than it was in 2007. So property is kind of out as well if we're considering the short term. So what other options do we have? We could just leave our money in the bank, or maybe even move it into a savings account, where you might get 2% or 3% interest on your money. But again, there's problems with this as well. During a recession, the Fed or the Bank of England tend to cut the base rate of interest. This obviously makes it much easier for companies to borrow money to invest and expand, but has a negative impact on you and I, regular people, because it means that our savings rates are decreased. What was a 2% or a 3% interest on our savings account suddenly turns into a 0.5% interest or 1% interest on our savings account. So if we are putting money into a bank to save it, it doesn't really grow that much. It just kind of stays as it is. But on top of this, as companies can borrow money easily, that means the economy is going to grow. You and I can also borrow money much more easily, and therefore we're more likely to spend. And that impacts the supply and demand equation. Prices are going to rise because of increased demand and inflation. So therefore, not only does the interest rate on our savings get cut, but inflation also increases, making your money worth less because the price of everything around us goes up. On top of this, governments also tend to print more money during a recession, therefore making your money worth less. Having £1,000 in your bank account is great when a pack of eggs are £1 each. But what happens if that pack of eggs increase to £1,000 each? And what happens if you've got a 1 of 10 special edition car? Great. But what if the manufacturer suddenly decide to build another 10,000 models of that car? Not so special then, is it? So investing in stocks is out. Property is out too. Leaving your money in a bank is out as well. So what else is there? And that's where precious metals like gold and silver come in. Commodities aren't really directly impacted as a result of a recession. Gold isn't going to have to make any of its employees redundant. Silver isn't going to fail to pay back any of its external loans. People aren't going to get evicted from their aluminium holdings. and that's why commodities aren't really impacted by a recession or a pandemic. So therefore, the only things that really impact the price of commodities are supply and demand. Obviously, if a huge undiscovered gold mine is found, then the supply is going to massively increase, and therefore the price of gold is likely to decrease if demand stays the same or reduces. And the really interesting thing is, say if the demand for gold or silver increases due to some crazy reason, say for like a recession, and the supply of gold and silver decreases because if the mining companies can't produce and manufacture as much gold and silver, well, the price is going to rise. Unlike currencies such as the dollar and the pound, the government can't print more silver, which obviously dilutes the supply of something and therefore depreciates the value of something, such as leaving your money in the bank account. On top of this, if negative rates do actually become a thing in the US and the UK, and they become so negative that you have to pay to store your money, then all of a sudden buying silver and paying to store your silver doesn't seem so unreasonable. If you've made it this far, be sure to comment the word unreasonable so that I know that you've made it this far into the video. And as always, check out some of my other videos if you haven't already. So let's talk about actually investing in silver and some of the problems that you might have when investing in tangible silver. As I mentioned earlier in the video, a lot of silver merchants have actually been running low on their supply of silver. Obviously, demand has seen quite a spike recently, and the silver mining companies and processing companies have been struggling as a result of the pandemic. And if you turn to some of the unapproved sellers, like buying through eBay, you're probably going to be paying quite a high markup on that silver. Instead of paying the going rate, which is around £21 an ounce, you'll be instead paying around £30 an ounce. And you run the risk of being sold fake silver or a knockoff product that isn't pure silver. And also, just like those videos where the guy wheels in a giant drum of oil into his work elevator, you probably don't want to have to faff around with tangible silver. You don't really want to be trying to hide it under your bed or go through the faff of arranging a safety deposit box or a safety deposit vault. So how else can you invest in silver? And the easiest way is to buy virtual silver from a stock trading platform. That way all you have to do is create an account, load that account and buy the virtual commodity of silver. You could also invest in a precious metals ETF, and that might track the movements of a number of commodities such as gold, silver and aluminium all in one ETF. Obviously, the main downside to investing in this way is that these platforms are stock trading platforms, and during a recession, stocks tend to crash. So the stock trading platform or the market maker themselves might experience liquidity issues when trying to pay out profits that you've generated. Stock trading platforms and market makers are supposed to keep these client reserves separate, but obviously if you look at recent examples set by the film The Big Short, the market makers took on heavy losses and couldn't actually really afford to pay out in the money credit default swaps. Personally, because my silver investments are fairly small, in the thousands of pounds or tens of thousands of pounds, I feel fairly confident using a stock trading platform. But obviously if I was going to take a much larger position, like a £10 million position or a £100 million position, I'd probably rather find a safer way to invest. As always guys, if you enjoyed this video, then be sure to check out some of my other videos. Alternatively, subscribe to the channel and ding the notification bell. That way you'll be alerted when I upload a new video. Cheers!